Good day, everyone. Jeffrey Beamer here, Senior Investment Strategist over at ewotrading.com. Welcome to our show. It is Monday, May 20th. We got a lot going on this week. So we're going to start off with talking about our trade from last week. Interesting update today on that. Talk about headlines for a moment, what's hitting the tape here on a Monday. Look at markets, U.S. markets, maybe some metals, oil, etc. Looking ahead at earnings, we're still cranking through earnings season. And talk about a stock to watch this week. So let's get right to it. We're going to start off the day with our trade from last week. Normally, I have an answer for you, but this trade on Palo Alto Networks, mine went blank there for a second. PANW is the symbol there. Normally, we have an answer as far as how the trade performed. Well, we do have that kind of answer, but the conclusion occurs after market close today. Palo Alto Networks declares earnings today after market close, but we're in a situation where we have some nice profits right now. We're up 13% in our trade in a week. All right, up 13%. We've made about $370 in the trade. And for those of you that are more conservative, I would take this trade off. Now, you might ask, how does this happen? Well, as you can see in our risk graph here, the red line is dissecting the blue line. So the blue line is price horizontally, and it comes over into the risk graph, and the red line represents today. And you can see that we're in the profit zone to the tune of about $370. And that's from the anticipation of the earnings announcement. Implied volatility rushes into the options, and combine that with a stock move. The stock has moved decently higher over the week. Okay, as you can see in the chart, stock has moved higher. Implied volatility has rushed in. That generates here a double-digit profit. Now, how I would handle this is one of two ways, because the risk here is to the downside. If we move higher from here, as you can see, we're really close to our upper break even. A move up of 5%, 10%, maybe more would generate some really nice profits. However, a drop in the stock, it's a long way down to our lower break even. All right. And this could cause a problem. That's why I'm thinking maybe taking the trade off today here in the last couple of hours of trading. However, if you did 3 contracts or more, you are in a situation where you can lock in profits by taking off 2 of the 3 contracts and leaving 1, okay, to go through the earnings announcements and then possibly add possibly add to your return. If the market goes the other way and the stock drops and doesn't drop enough, well, then we still keep a little bit of profit because we locked in with those contracts. So if you did 6, I'd take off 4 or 5, that sort of thing. If you did 8, I would take off 6 or 7. Okay, that sort of adjustment. All right, so we'll see how we'll revisit this once again next week. All right, but for the conservative traders, take this off today. Double-digit profit, always nice, and then you don't have to worry about the earnings event. For those of you a little bit more aggressive, we'll take a look and see how this stock did next week. Okay, with that said, let's get into some of the headlines for this week. Interesting stocks S&P keeps creeping higher, Dow, NASDAQ. We're going to take a look at those in a moment. But tech is really driving this. Nvidia and the tech sector are rallying here this morning in anticipation of earnings for Nvidia later this week. All right. Another headline here is that affects crude oil, really, potentially, is the Iran's President Rossi, was killed in a helicopter crash, and the VP is taking over as interim president. Oil markets are holding steady on this news. They're off their highs. Okay, there was a little concern there, what's going to happen, and things are working out there. But that was let the speculators talk. Okay, just about whether what happened there. We'll find out over time what's going on there. Next headline is a sad one. Red Lobster files for Chapter 11 bankruptcy protection. No more cheesy biscuits, possibly. as they look for a buyer. Okay, they're looking at their creditors for possible purchasers, and they're open to anybody else to come in and essentially save the company. But some ill-advised strategies that they deployed in the past did not work out, including the all-you-can-eat shrimp that just killed their margins last year, and the company reported a loss because of that. So sad day there for Red Lobster. Then we'll move on to Target. They have earnings this week, but interesting note, they're in the news. They're offering lower prices on over 5,000 items. And what gets my eyebrow raised is this some sort of messaging for their earnings coming up? We'll see. Is this kind of code for something to expect from earnings? All right. And speaking of earnings, earnings are kind of tapering off. We're coming on the backside of earnings season, but that does not stop the big names. And we'll talk about those here in just a few moments. But we're down to around 950 companies declaring this week, so a lot lighter, and we're on the backside of this particular cycle. Okay, let's jump over to the charts and take a look at what's going on in the markets. And we're going to start with the S&P 500. Our proxy for the S&P is the Spider Index Trust SPY. And take a look at this. We rallied up last week, broke through resistance up here around the 520, 523 level. And now we're finding resistance at 530. This morning we had this nice green candle going into to start off the day, but we're off those highs. And I'll zoom in on the chart a little bit here, and you can see the wick up here. And look at this. After midweek last week, Wednesday, Thursday, Friday, Monday, we're right up against that 530 level. And is this a possible area of topping before another pullback? Well, we'll see. But this market is still strong, and I think it might wait for some of these names to declare this week before maybe taking the next push. But we're up here. I like using the Heiken Ashi to help tell me what is the trend, and of course, the trend is still in place here with these nice green candles. So I wouldn't be too concerned. We're trading above my 10-period moving average, as you can see, above my 21 period. They're both pointing higher. And of course, my long-term moving average is the 161. It's also pointed higher. So we're still bullish, but finding 530 is pretty significant resistance. We will see what happens this week as we go through not only the earnings, but some economic announcements. Now over to the NASDAQ, and we're going to look at the Qs. Kind of the same thing here, where this is a nicer little looking chart, considering we have a nice candle today. We're up about 53 basis points, so a little over half of 1%. Compare that to Spider, which is just up 7 basis points, pretty much flat for the day. Okay, NASDAQ is stronger, and we're seeing this press up against that 454, 455 level here. And again, if we look at any type of threat of a pullback, we're not really seeing it. We're still seeing these nice green candles, no wicks on the bottom, just a nice little trend going higher. So for now, market is bullish, and that's how we would be positioned, is to the upside. Now, IWM, the Russell, is still trading in its range. It's testing the upper boundary of the trading range. I'll pull in some more data so you can see this. You can see that really since last December, we entered this trading range between 190 and 210, and we're trading at 208.78 right now. That's at the top of the range. And who knows? Any type of news or negative type of comments this week, there's a couple of opportunities for that to happen, and as I'll talk about in just a moment, and we could see the markets pulling back. But for right now, everything is still bullish, everything is still higher, and we could see some breakouts here possibly, and markets moving higher. Now, we did talk about crude oil. We did mention that, and after testing the short-term moving average, that my 21 period moving average, you can see that we're well off the highs. In fact, USO is down almost 0.5% on the day right now after it was up very nicely early. If I zoom in, you'll see the big wick here. We were well above, and I thought, oh boy, here we go. Upon that news of Iran's president being killed in the helicopter crash, thought, here we go. But no, we're other factors have moved in, and we're seeing this chop that we've been in, this little range that's formed since early May, bouncing around between 75 and 77.5, this little $2.50 range, and we're stuck right in it. So we'll watch that 21 period, which is my red line here. We'll watch this for resistance. If we break above it, then we could put on a bullish trade and look for probably a test of $80 pretty quickly, but not now. I thought that day might be today where we got triggered into a trade to move higher, but nope. You can see the 21 period is pointed downward, and not looking too bullish for crude right now. That's not the case for gold and silver. Let's start with gold. Boy, look at this. And again, this isn't Hike NSE here. This is regular candles. Look at those nice little soldiers just bouncing up higher. 225 is where we're trading now. And with that momentum, we're looking at 230 is well within our reach here within a week or two as gold continues to rally. And I've said for some time, actually quite a while ago, back in late March, if you didn't have gold, it was time to add gold. And if you had a gold position, it was time to increase your holding. And boy, did that prove to be some sage advice as the gold rallied, and then it paused. It had a little bit of pullback, came back down from 220 to 210, but as you can see here, jumped over our trend line, and we finally got this big breakout candle here on May 9th. And other than this 2-day period of volatility, we just kind of took off. The one thing that smooths that out is when you put the Hike NSE on, and things become a little clearer here. As you can see, we get this breakout candle, then a good entry day here on Monday the 13th, and then marching right up. This looks like a very good, strong market. And I would probably target something up there around the 230 range, somewhere between 225 and 230 over the next 2 to 3 weeks. And I think we'll definitely get there, unless there's some macroeconomic thing that occurs and things change. But I don't see that happening right now. So gold is up about 78 basis points today, so 0.75%. But silver, it's up over 2% today. It is rocketing higher. This thing is going parabolic, so to speak. This, as you can see here, if I draw this little line out, okay, here's what I'm going to do. Let me remove this one. All right, so you can see the angle. If I kind of thread this trend line through the middle of price here, all right, this is what bothers me. All right, so you see that angle there. All right, now what is happening is that we're steepening the angle of ascent. And get my other here, and this just started a couple of days ago. And I've shown this before, where when you get this separation, you have this one angle, and then you steepen. What happens? Markets pull back. Don't know if that'll happen today, but it'll inevitably happen, especially if we get a couple more days of a hard rally here. Okay, so watch out for silver. I think it'll still go higher, but it could make a sharp turn anytime because of that increase in angle of that vertical ascent. Okay, moving on to bonds. Let's start with the long end of the curve. This will be TLT. This is the iShares 20-year Treasury bond ETF, and we are off the lows of the day. Okay, rates were a bit higher this morning, and coming off their highs a little bit as TLT begins to rally. It's only down 10 basis points right now. In fact, just ticked over to 9 basis points, and we could see this kind of rally up through the close today, possibly even turning positive before the close. All right. And then continuing on with the short end of the curve, that would be SHY. This is the iShares 1 to 3 year Treasury bond ETF. Kind of the same story here. We were lower and now we're higher. In fact, we just ticked positive on SHY, meaning rates are coming down on the short end of the curve. Okay. So, we had this little bitty pullback after prices rallied and rates dropped. Okay. And then rates kind of came back up just a little bit. So bonds are really, it's not a place that we spend a lot of time on, but we are these days because this is where a lot of the action is here. And I see one other thing. Let's just draw a trend line across these tops. Yeah, we did dissect. We did dissect that. So we gapped up above that, and we did not trigger. We've been pulling back, and look, we're coming right back down to that support. So we'll watch the short end of the curve as we move on. Speaking of the long end and short end of the curve, let's check on the yield spread, which we watch every week. Okay. And over the past couple of weeks, I've been showing that divergence where the one angle is up at a 45 degrees, and then we increase the angle to a sharper angle. And I said, oh, this is not good. This, the bid at the spread is going to widen, and it sure has. As we look at the image, we're down at 104. As comparison, last week we were at 97 basis points. Now we're off Friday's close of 105. Now we're down at 104. So we just ticked higher slightly. But from last week, again, it's a wider spread between the long end and the short end. And again, this is just not healthy for the bond market. It's not healthy for the economy to have an inverted yield curve like this. We talk about it all the time, and we've been talking about it a long time because we're still inverted. Okay. Now, speaking of rates, let's check mortgage rates. Wow, what a week in mortgage rates. Last week, we saw the average 30-year bond rate drop all the way to 7%. And then if you look closely at the chart, we're going to focus on the blue line, which is the daily change. That's the Mortgage News daily rate. Okay, that's an average of 30-year mortgages. You can see it bouncing right off of 7%, ticking higher, probably up at 7.12 right now today, but still that dropping from 7.5 all the way down to 7 within a 2-week period. It's a lot of volatility for bonds and a lot of volatility for homeowners. We're still seeing builders suffer, having to offer incentives for traffic to come in, to generate traffic for people to take a look at their inventory. They're having to buy down rates, or they're having to give incentives such as upgrades in finishes, et cetera, and they're still having to do that. So we'll keep an eye on home builders. All right. But speaking of individual companies, let's move on to what we got coming up here, and that's earnings. All right. As I mentioned earlier in the show, we are on the backside of earnings, and this list here is just some of the bigger names, more well-known names, or stocks that have unusual option volume in them. And really, we started this morning with several names. And then after the close of the market today, we got Zoom and Trip.com, Nordstrom's, to just name a few. Then tomorrow morning we have Macy's. Tomorrow afternoon we do have a builder to watch, and that is Toll Brothers tomorrow afternoon. Now they're more of a luxury home builder, but so we'll see how Toll Brothers do. We also have Urban Outfitters, a major retailer. Moving on to Wednesday, we do have some economic news coming out at 2 p.m. Eastern time, and that's the FOMC meeting minutes. We'll keep an eye on that. But in the morning, we have Target, Petco, and TJX. All eyes are on those retailers in the morning. And then after the close, we have Focus on Tech with Nvidia earnings after the close. We also have with Beauty, which has been quite the stock over the past 18 months or so, also has earnings. And then we move into Thursday, and you got TD Ameritrade and Ralph Lauren, and some other names. And then again, more tech on Thursday as we have Intuit after the close on Thursday afternoon. Let's see here. We also have Workday and Deckers. So there's some interesting names declaring this week. But that Nvidia and Target and TJX, Toll Brothers, those are some names to really watch in different sectors as we go through the week. Now, we trade a lot of earnings, all right? Meaning we have two different strategies that we focus on. We focus on stocks that are typically not going to move through their earnings announcements. These are more well-established companies. They've been around a long time. It takes a lot to move the needle with them, and we look to capture some theta decay as also some implied volatility decay or IV crush with certain strategies around that. And we also focus on stocks that are breaking out, stocks that are real movers and bouncing around, like Palo Alto Networks, which we think is maybe going to gap up or gap down after the close today. All right, so we also focus on those. Now, I have a free guide available to you specifically to talk about how we trade these stocks that we anticipate are going to really move. And that's available at ewotrader.com/straddle. Okay, ewotrader.com/straddle. And you can get the copy of our guide. There's no cost to it, but you can see how we trade volatility around earnings and these stocks that are going to move or potentially move big around earnings. All right. And so that takes us into our trade for the week, which we are going to look at one of those stocks. Okay. And this has been a stock that we've had quite a bit of success with. This is a stock called Pinduoduo. The symbol is PDD, okay, or Pinduoduo, sorry, Pin, Duo, okay, but the symbol is PDD. And what I have here is a little strangle, okay, around the 145, 146 level on our calls and puts. We have this strangle here. The price of this is going to be around $1,400, okay, per strangle, okay. But this is a stock that moves, and it typically moves pretty big through earnings. In fact, you can see the last earnings they had that big candle. We opened up way higher in the day and then sold off all day long. And then within days, the stock was trading below price, below the pre-earnings price. Okay. So this stock is a mover, and it's one that we've had, as I mentioned, have had great success with. But for these straddles and strangles, sometimes you are paying to capture either a move up or down. In this case, we're anticipating a move really either way. Okay. And so they have earnings announcements, I believe Wednesday after market close is when they have it, I believe. Let me just double check here to confirm. It will be Wednesday, yes. Before market open. Wednesday, before market open, PDD has their earnings announcement. All right. So that is when we will be watching for this. So hopefully you've enjoyed our show here. I got a couple of announcements to make as we close out today. Next Monday is Memorial Day. We will be taking the day off in observance of Memorial Day, as that is a stock market holiday. And then we will be back on Tuesday. And speaking of Tuesday, next week on Tuesday, May 28th, there is a significant change in the trading world. Currently, stocks that you trade are settled with a trade, what's called T+2, trade date plus 2 days. Okay. It used to forever be T+3. Okay. That was the settlement time forever and ever. Okay. And then recently it changed from T+3 to T+2. And then next Tuesday, a week from tomorrow, we change to T+1. trade date plus 1 day. Okay, stocks will be settled the same way option trades are settled. Options are settled T plus 1, which means trade date plus 1 day. Okay, and stocks will be done that way too. Okay, just with technology and the speed of servers. Okay, we can now settle stock trades very quickly, and that also takes away from people trying to manipulate, between when they own stock and are assigned, or they exercise, and when the trade settles. So 1 day settlement that begins next week. So with that said, everybody have a great trading week. Hopefully you enjoyed the information we have here. We'll come to you next Tuesday. We'll see how Palo Alto did, and also how PDD, Pinduoduo, did on these trades as we go through the trading week. Okay, everyone take care. Have a good week.